Let's market sense. Talk about the macro situation at large. DK Joshi, Director and Principal Consultant of Crisil, joins us right now on the show. Good having you. Thanks so much for joining in. We heard a couple of reports, or rather read a couple of reports over the last few days, which mentioned about with what the currency is doing. More importantly, it just becomes that much difficult for the macro situation to improve because inflation could actually rear its ugly head once again, if not in this month, then over the next couple of months. Is that the big worry picture with regards to India right now?
Well, I think inflation is today very comfortable. I mean, it's below central bank's target. But I think going ahead, yeah, rupee can pressurize, particularly from the fuel side and the commodity side. We've seen reduction in global crude prices. We've seen reduction in global commodity prices. All that could be nullified if rupee continues to remain where it is today. And I think that will start feeding into inflation. It will also have fiscal implications because I think the subsidy bill will go up unless you pass it on to the end consumer. So I think and the fuels that are linked to the market like naphtha, petrol, etc., their prices will anyway go up. So I think what we believe is that if rupee, for instance, if the average value of the rupee for 2013-14 is at 58, then it completely wipes out the impact of reduction in global prices, and the inflation could inch closer to 6% in that case.
What's the call then on yields for bonds essentially right now, given that there's been a fair amount of volatility in that market?
Yeah, actually, bonds have displayed a lot of volatility, and going ahead, I think I see fiscal pressures remaining under control. I think that's what the finance ministry has been saying, and I think last year they did walk the talk. So I think the demand for bonds is not going to be that high going ahead. And then the supply, I think the need for government to finance its deficit by issuing bonds is also going to be lower if they maintain the targets that they have set for themselves, which I think most of the people do believe that fiscal deficit will stay close to 5% or below 5%. And inflation is going to, if rupee corrects a little bit, inflation is going to inch down, and we also pencil in about 25 basis point rate cut from RBI. So given all that, I think we do see some reduction in bond yields from the current levels, and we believe that by March it will be in the range of 7.3 to 7.5. This is the 10-year bond.
Right. Give us also the expectation there is from the CAD numbers, as well as how that would influence perhaps all that talk about revival and growth.
Well, I think CAD is definitely going to come down, I think, because of 2-3 reasons. One, I think the gold prices are down. The second, I think the government has imposed duties on gold, and I think that is, at least in the short run, is going to reflect in lower imports going ahead. So and also, as I said, the upside to commodity and crude in dollar prices is not very high because China is also not doing much weaker than was expected earlier. So there's no big pressure on commodity and crude prices. So as a result, the trade deficit would narrow going ahead, and I think this should also bring down the current account deficit. Our call is that CAD will be around 4.5% of GDP in 2013-14, and if CAD does narrow as we believe, as we expect, and government does introduce some of the reforms which it has been talking about, then I think that could introduce a little bit of appreciation bias in the rupee, which is currently at a very weak level.
Okay, just before we let you go, it's an interesting observation that you make about the CAD. By when do you think it starts happening? Because gold imports were down in the last month as well. Somehow that impact did not come through. So is there a particular time frame or a particular month from where you believe certain factors will start playing on the CAD and help bring it down?
Yeah, I think if you look at the fourth quarter numbers, which will, I think CAD is yet to be released. I think that will be lower, but then after that it will go up because it will start reflecting what happened in the month of April and May in the data. Then I think from the second quarter of this fiscal, I think we should see CAD softening. rather I think I would say a more sustainable decline in CAD than what we'll see in the fourth quarter of 2012-13, because this will the next what I'm trying to say is that between in the month of April, in the month of May, the trade deficit shot up very significantly, so that will get reflected in the first quarter CAD numbers, which will take some time to be out. After that, I think we'll see so what from, let's say, July onwards, I think the CAD numbers will start reflecting softness.
Leave it at that, Mr. Joshi. Thanks so much, though, for taking the time out and being with us and giving us this snapshot. That's tracking the macro data for you.